Alright folks, how's it going today? We're going to talk about gap insurance, guaranteed auto protection. Basically, it is a product designed to protect you in the event of a total loss. That includes hail damage, an accident, hit a deer, a moose. We live in Montana after all, so that could happen. Basically, if the vehicle is declared a total loss, what it protects you against is negative equity and a difference between what your actual cash value is from the insurance company and what you owe on the vehicle. A lot of times this can come in handy, especially if you add accessories or you have negative equity from your last vehicle, or if you drive a lot of miles within a year. So I will do a little diagram here that I do in my finance office that explains what gap insurance is and how it functions in relation to your loan or lease. So first we draw the box. So what you're looking at here first is this is your loan to start with. This is you paying it off. So to start and to finish, the X in there. Sorry, I'm a lefty, so everything's kind of tough on a whiteboard. Next, we're going to draw the relationship of your vehicle's equity or actual cash value. Now, I don't use exact numbers because every vehicle is different and it's very difficult to know when exactly you'll get equity in a purchase. But this is your vehicle to start with. That is paying off the loan. Every month you make that payment, and let's say you were to get into an accident right about here. Hail damage, total the vehicle, you go off the road. Your insurance company is going to give you an actual cash value, which is represented by this line. And you could owe this much on the vehicle. So what happens is you create a gap between what they say it's worth, the actual cash value, and what you owe on the vehicle. The other thing the gap insurance does is most people carry a deductible. Gap insurance pays off the deductible, whether it be $250, $500, $1,000. So right there you're going to have some money savings with the deductible. That's going to pay off right there. If the gap insurance costs $500 and your deductible is $1,000, right there you're coming out ahead. But it also covers the gap between what you owe and what they say it's worth. Now, a product we offer, which is CNA National's Gap Insurance Preferred, they actually give you $1,000 towards the purchase of a new vehicle. You have to buy it from our dealership, but that comes in really handy because if you just totaled your vehicle, you obviously are waiting on an insurance check, and if you're not getting any money back because you had a deficiency between what you owe and what they say it's worth, it'd be nice to have a little down payment money, and that's where the $1,000 comes in handy. Now this line, a lot of people ask, well, what happens here? That represents at some point you're going to pay down the loan enough that you would actually have some equity in the vehicle. I'm not sure when that exactly will be for you. Every loan is different, but at some point it will happen and eventually you will pay off the vehicle. So this explains gap insurance in a nutshell. If you have any questions, let me know. Thanks for tuning in, and I'll be doing some more videos in 2014.